what I'm going to do today is talk about how Bitcoin, again, a particular implementation of Bitcoin in a modern financial system. What is a modern financial system? Well, it would be cloud-based, talking about accounting, things like inventory management, orders, invoicing your customers, receiving cash to pay bills, and so forth, right? So I'm going to illustrate that. There's two key concepts that I'd like you to be able to take away from this talk. The first concept is about foreign currency accounting. For the purposes of this conversation, pragmatically, Bitcoin is foreign currency. As treating it as a foreign currency, there's two key things that will emerge. One is you'll be able to make good assessments around your economic performance of working with it, trading with it. And two, you'll be able to meet your regulatory requirements because there's standards already in the marketplace for how to do foreign currency accounting. The second thing that I hope to show you today is that an integration that's deep into a financial system will actually drop the cost of working with Bitcoin in such a way that we'll see major adoption happen by larger organizations, which is what we really need in order for it to spread for adoption. So I think the best thing for me to do is do this in a demonstration. The demonstration, in order to work in a financial system, there's a number of things that need to come together, and I'm going to illustrate each one of these things. So let me just step through it. First thing we're going to do is we're going to talk about the exchange rates, right? It's going to be treated as foreign currency. We're going to talk about this, and I'm going to talk about it in the context of microbit coins and price updates. Let's switch screens here. I'm not going to spend a lot of time talking about this financial system because I'm going to talk about points in the financial system. It's really not relevant which financial system we're in. It's just this is a particular proof of concept so you can see. So the first thing I want you to see is that if we're going to be tracking prices, we're going to need in the financial system prices of Bitcoin. So here what we have is an exchange rate table, and prior to getting ready for this, I basically updated it with the latest prices as of 8 o'clock this morning. And at that point in time, the last price it was $122 for USD. Basically, an organization in a Bitcoin world would likely update this table frequently, and that would run in the background, maybe every 15 minutes. That's up to the organization to determine, right? Next thing I want to show is that in a modern financial system, this one actually supports 190 different currencies. We need a placeholder in the financial system for Bitcoin. What we've done here is we've taken or substituted a particular, we've substituted a currency because since Bitcoin does not today have an ISO certification, the financial systems aren't necessarily ready to accept it. So what we need to do is we need to substitute a currency for Bitcoin. In this case, I took the Thai baht as one of the currencies to substitute. I like the Thai baht because its symbol uses B, right? And I'm not going to be trading Thai baht normally in this organization, so I can work with that. What's important, though, is that financial systems are not used to the decimal points that we see in our Bitcoin. And so what we need to do is we need to, in this case, I converted to micro Bitcoin, which is essentially 6 decimal places in. And so then that way, the total space is actually 8 decimal points. I can then use the 2 decimal points that I'll get to represent the total. So in essence, that $122 I need to express in an exchange rate in micro Bitcoins. Once I do that, then I have the opportunity. Let me demonstrate then what this would look like, because once you have multiple currencies inside your financial system, you have an opportunity to express your goods and services in different e-commerce site that's built on top of this financial system. It's all fully integrated real time. Because it's fully integrated and so forth, it allows for transacting business. A modern financial system allows you to do that. It allows you to transact with your customers and do the proper kind of accounting in the back office. You notice here, we actually have a product that is, I think the best way to show this is, notice down here I have a currency selector. Imagine you're a customer on a website, and you normally work in dollars. Let's just start in dollars, we'll start it that way. I tried to price it very close to the exchange rate just so we can see what's happening. So this air purifier is $122.76 US dollars. Let's suppose you're not in the United States or you have Bitcoin and you want to use Bitcoin. You can effectively use micro Bitcoins here, and it would be priced at, this is effectively 1 Bitcoin, right? Now, I'm not suggesting that this is how you would format that, right? That would be up to the merchant and so forth, but these are some of the concerns that are coming forth, right? If the purchasing power of Bitcoin continues to grow, the decimal points are tripping us up. But this is a choice of the merchant. It's not really relevant for this discussion. The idea, though, is you can imagine that if I were to place an order here, it's going to end up in the back-end system for fulfillment. So let's just go to the fulfillment system and place an order. So let's imagine now we're not doing e-commerce over the telephone, or through the website. We have a customer calling on the telephone, wanting to buy that air purifier. What we would do is we would start a transaction. So I'm going to initiate a transaction as if I'm doing phone sales. I'm going to go ahead and select the customer. That didn't work right. We want to purchase that same air purifier, which was the A350. Notice here that the same price, $122.76, right? This is fully integrated. But the customer over the phone says, you know what, I'd like to pay in Bitcoin. What would that cost? There you go. The price dynamically changes. So the power to the organization that treats Bitcoin as foreign currency in their financial system has the mechanism to automatically and dynamically know the prices of things. Let's go ahead and purchase that. What we've done is we've enhanced the financial system to include Bitcoin because natively it does not have these things. So what I'm going to do is I'm going to say, hey, when I save this order, I want to initiate the payment request. I want to make sure it goes out to me. I'm being patient. Spinning it. Let's get that aside. Typically it's faster than this. Okay, so as you can see, I've got my micro Bitcoins here. I've got the order committed. I now have an order ID. If I go over to my Bitcoin tab, I now have a record here that's a payment request. You can see that it's been requested. I know the exchange rate. In this implementation, we actually went out and got the latest prices. And at that point in time, it was 122.80 in this implementation. That would be a choice for the organization. They can use their internal rate tables, or they might go get spot rates, say. Let's go now from the customer's perspective. We now have a payment request that's arrived. I see this has just arrived. So now I'm the customer, right? And now I need to pay for goods and services. So here we have an email, which is a request for payment. You can see that this was the invoice. We're asking for this many micro Bitcoins, right? And here's the address. So let's go do that. I got my wallet. I'm in the test mode. label over here, which is descriptive. And I see right here it's saying send 1 Bitcoin. Set that up. Yeah. Hit send. Great. Now, the next part of this I kind of call Bitcoin transaction coordination, because we don't want to ship the good until we know the money's been received, right? So what we would be doing here, that the organization would do, is if we go to our Bitcoin payment request, let's have a look at that. This was what was initiated. We can see what we're doing is a capture. So a modern financial system, we could go capture, receive Bitcoin, but there's no reason why we have to pay. Once you have Bitcoin, why not pay your bills? This implementation actually can pay bills with Bitcoin. Here was the invoice. This was the amount we're asking for. Here's the QR code. Now, at this point in time, blockchain, we don't know the transaction. Let's go ahead and get status. There we go. Status now has changed to unconfirmed. We now have a transaction ID. Bitcoin, or micro Bitcoin in this case, are on their way. The organization can set up rules upon what are the different statuses they want to have in terms of how many blockchains that they want to have confirmations and so forth. The idea is once the Bitcoin has been received, then it's safe to ship the good. So we don't have the time to wait for that Bitcoin to arrive. So let's go look at another transaction that has already been received. You know what, I did one last night, which is right here, you see unconfirmed. Let's go into that, because I know that Bitcoin should have finally arrived since last night. So let's just get the request. Right now it's unconfirmed, so this is a different transaction I did last night. Now normally this would run in the background for an organization, and they would use the status to indicate whether the Bitcoins have arrived, and they would run their operations in their warehouse to be able to know it's safe to ship, right? Indeed, look, it has been sent. Now, some other things that are important here that have happened. Now we have some accounting to do. Money has arrived. So if you look over here, our initiating transaction was an invoice, which was the request for payment. But now that the money's arrived, we have a concluding transaction. This is effectively the accounting for the Bitcoin that has arrived. And so we're essentially saying the money's been deposited because we're treating the Bitcoin like a bank account. Let me show you for all the accountants out there, let me show you what the debits and credits look like, because that's for me where it always really hits home. If you look at the GL impact of this is the first opportunity for you to observe something interesting. Notice that the presentation in the general ledger is in USD, but we transacted in Bitcoin. The modern financial system basically presents information in your base currency, while at the same time it's holding the fact that you did things in a different currency. We didn't convert the dollars, right? There was nothing here that did conversion. We are holding Bitcoin. But for this transaction, at that point in time, at the price we did it, it was worth purchasing power of $123.25. That's what has you, as a business owner, be able to make the proper assessment around the economic performance of your trade. Okay, so I showed the order management. I showed you some accounting. Now what we can do is run a financial statement. So we'll do a balance sheet, which is basically where we're holding are Bitcoin in terms of its balance. What I want you to focus on is this one right here. Effectively, this was the wallet that I directed the funds to. A merchant may have multiple wallets for different purposes, right? Each one of them having a particular general ledger account. Here it's saying $895.64 or 7.8 Bitcoin, which should match up to what their wallet balance is. Now, most of you might say, wait a minute now, is that the price of, the current price of a Bitcoin times the current price of Bitcoin times the number of Bitcoins that we have, or micro Bitcoins really here, is 895.64. No. What this is a culmination of all the transactions that you did at different prices. And now what we have is, okay, we have the opportunity for something called currency gains or losses through revaluation, which is a normal concept because prices do change, right? And you need to be able to recognize that. So a modern financial system allows for that. So what we do, we run a function called revalue open currency. It looks like it's complete. Let's go look at what it produced. So it created a transaction for us called currency revaluation. If we pop down, we look here, the price of the Bitcoin at the current exchange rate resulted in a gain of $67.88. Prices fall, we're going to have losses. Prices go up, we're going to have gains. You get to determine the frequency for which you're going to recognize that. And look at that. Now that we actually have a gain and loss transaction, we can go over to our income statement to see what the presentation of that will look like. So a couple things I want to just show here. One, on the income statement, we can see we had sales of $721.16, but they were actually done in a different currency. They were done in micro Bitcoins. So here's your revenue side. Down at the bottom, which is traditionally where the presentation is for gains and losses, at the bottom here represents the cumulative gains and losses from all the different currencies that you're working with in your business reported on the income statement. These gains and losses then are reported just like everything else you do in your business. This helps you meet your regulatory requirements. So I think what's most important here to just see is that global organizations that are working with multiple currencies and so forth are used to this. This is all standard practices. There's nothing weird going on. By treating Bitcoin as a foreign currency, you're going to have the listening of major organizations and so forth. They'll know how to treat it. They'll know how to then report on it. These practices will help with adoption worldwide. And this is my vision on ways we need to go to make things very easy and to increase our adoption. At this point, I think